Okay, so if you own Palantir, or you're planning to buy Palantir, or even planning to sell Palantir, this is definitely a video that you need to watch. Hey everyone, welcome back to Underdog Investing. So today we're going to go through this article and go through some of the key points from this article, which demonstrates how Palantir could potentially become a $1 trillion valuation company, giving us plenty of returns. So if that's something you're interested in watching, stay tuned. And like always, I'll be grateful if you can smash that like button and subscribe to the channel for future updates if you haven't already. So let's jump straight into it. The path to $1 trillion valuation for Palantir. So it starts with Gotham, which is one of the aspects of the Palantir business. And the actual government side of Gotham is one of the biggest revenue generating areas for Gotham. And if you have a look here, in Q1 of 2021, they were able to increase their revenue by 76% compared to Q1 of 2020. And the US government revenue shot up by 83%. Now, just to demonstrate that, using this graph, so in Q1 of 2020 you can see we had a government revenue of $118 million, and just 1 year later in Q1 of 2021 that shot up by 76% and we had a revenue of $208 million. So massive growth in just 1 year. But what's exciting is how much we're going to grow over the next 20 years. So first of all, let's have a look at their addressable market. So the US government total addressable market is around $26 billion, whilst the total Gotham addressable market is around $60 billion. So we've got a massive market that we can target. And if we imagine, so let's imagine the total addressable market that we just described grows only in line with inflation, which is about 3% per year over the next 20 years. But we all know that it's going to grow faster than inflation just because the actual data industry is going to be huge and it's going to grow exponentially. But let's just be conservative for now and say 3% per year over the next 20 years. And let's imagine that Palantir is going to capture about 50% of the US government addressable market, as well as 20% of the rest of the Gotham addressable market. Then it will be generating a revenue by 2040 of $23.5 billion in US government revenues and $12.5 billion in other Gotham revenues. And that gives a total of $36 billion just from the Gotham side of Palantir business. Now, if you compare this $23.5 billion in 2040 to the $208 million, although this is just one quarter, so let's imagine $800 million, there's a massive difference. You can see we're going to grow significantly, and these are conservative figures as well. Moving on to Foundry. Now, Foundry is just as big as the Gotham side of things. In fact, it could potentially be bigger, I think. Although there is competition, so from companies like Microsoft, I think that the actual addressable market is just as big, like I said. So Palantir estimates that the total addressable market here is about $60 billion as well. And not only that, the addressable market for this sector is going to increase exponentially. So the actual global big data market is expected to grow at a rate of about 22.4% year over year through to 2030. And this is because AI, machine learning and data analytics are literally taking over. This is the future. So that's why it's going to grow so quick. So like I said, Palantir are riding all the correct waves. So they're in a perfect position to grow exponentially as a company because AI is the future. Now, if we have a look at the growth for the Foundry side of things, it's also very encouraging. So 72% year over year US commercial revenue growth. And what's really important is they've increased the number of customers by 11 new customers. That might not sound like a lot, but if you look at this, we've had a 29% revenue growth per existing customer. Now, what's really important is that not only are we increasing the number of customers, but we're also drastically increasing the revenue per customer. And that's very important. And these are very reassuring signs for a healthy company which is growing at a rapid rate. Now, like I said, Palantir is riding the correct wave. We're riding the AI machine learning wave, but they're also doing all the right things. So management are doing all the correct things. If you have a look here, 4 things that they're doing correct is that they're offering free trials of Foundry to companies that need help with reopening after COVID-19. Now, the fact that they're offering free trials is it really demonstrates how confident they are with their own technologies, and the fact that they are offering free trials to help these companies whilst they're in need. These companies are going to remember that, and it's going to be mutually beneficial for Palantir in the future, I think. Number two, they're partnering with IBM. They've got 50 new sales personnel in Q1, and they're planning to increase that to about 100 personnel by the year end. So if you double the sales personnel, you're going to double the sales. Number three, Palantir is actively looking to enter the cryptocurrency space, and again, like I said, they're doing all the right things. They know cryptocurrency is the future, so it's only normal for a company like Palantir, which is looking constantly towards the future, to actually go into that space. And finally, they're innovating to improve their utility and affordability for small and medium-sized businesses. So this is very important, and the reason for that is because until now, they've been focusing a lot on large corporations, and this makes them a little bit more vulnerable. And the reason for that is because each customer has such a high amount of revenue for Palantir, whereas if they branch into the small and medium-sized businesses, they're going to have a significantly higher volume of customers. Although the revenue per customer will be lower, it's just going to make the company a lot safer, and it's also going to drastically increase the actual addressable market for Palantir. So all of these things are very bullish for the Foundry side of Palantir. And if we have a look at the potential for Foundry, so the article says that they see potential of capturing 2% of the global addressable market by 2040, which would translate to about $46 billion in revenue by 2040. And this assumes a 20% compound annual growth rate in their total addressable market, which is being very conservative considering the estimate of the compound annual growth rate for big data and AI is 22.4%. So again, this article is being very conservative with their numbers and is still very impressive. And the final one, just quickly to cover, is SPACs. Now, this is not going to generate a significant amount of revenue, so they estimate a $200 million investment totally, with 15% annualized returns and $3 billion addition of market cap by 2040. So it's not significant if we're considering a $1 trillion market cap. However, it really does demonstrate a point, the fact that Palantir are not only investing in any old SPAC, but they're investing in SPACs which are the future. So they're investing in SPACs which go into the robotics, AI healthcare field. And I think this, like I said earlier, is mutually beneficial for the company as well as Palantir, because Palantir get to demonstrate their technologies and how it can be effectively used on these companies. And these companies also benefit from it. So I think this is a good thing for Palantir and the publicity side of things. And finally, how are we going to get to $1 trillion based on the information that we just said? Well, first of all, the estimated, the rough guess in terms of the price to earnings multiple is going to be 35 for Palantir. And that's being quite conservative. And obviously this figure could change. But if we take 35 as an earnings multiple, and then we take a adjusted operating margin of about 34% in their most recent quarter, with the anticipated $82 billion in combined Gotham and Foundry revenue by 2040, the income at that level would be $28 billion. And if we get the $28 billion of income and multiply that by the multiple of 35, and then we add the small amount of $3 billion from their SPAC investments or equity investments, that gives us a rough total market cap of about $1 trillion. Now, that's a huge number. Not many companies have reached $1 trillion, only a few. But what does that mean for investors like myself and yourself? So if we take the current market cap of Palantir, which is $45 billion, as you can see there, and this is as of today, and we take the $45 billion and we do $1 trillion divided by the $45 billion, and that will give you a return on investment of 22 times, meaning that if we invest money today, in 20 years time, if we reach a $1 trillion market cap, then it will be a 22x return on your investment. So that might not sound like a lot. I mean, it might sound like a long time before we reach that level, especially with nowadays and the craziness of the market. But if you imagine, it's relatively quite a safe investment if you compare it with other very high risk cryptocurrencies and that kind of investment. So let's imagine if we invested $10,000 today, and in 20 years time, let's imagine if we do get a 22x return on our investment. That means that $10,000 that we invest today will become $220,000 in 20 years time. That's not bad for an investment. So just to summarize, Palantir has a dominant moat in its US government business. Management is investing heavily in revving Foundry's growth engines. The company has also been aggressively buying stakes in SPACs, and therefore these three things could lead to a $1 trillion market cap for Palantir in 2040. So that is the end of the video. If you enjoyed it, I'll be grateful if you can smash that like button and subscribe to this channel for future updates. And I'd love to hear your thoughts in the comment section down below, so please do that. And if you found it useful in any way, please share this with your friends. Thank you so much, and I will see you in the next video.